Everyone, this is Ryan Edner with your Tuesday, July 16th morning wake-up call. We will start with the good to excellent ratings, which remained unchanged for corn at 68%. Also unchanged for beans at 68%. Most in trade were expecting a 1% increase, so seeing good to excellent ratings remaining the same should be seen as slightly positive here this morning. Also, on the slightly positive side, the rains in the 6 to 10 day map were reduced slightly. There's still moderate rains, but a little bit less top end totals than seen yesterday, so that might be seen as a bit supportive here. Also to mention from yesterday's selling, it was quick for many analysts to wrap that up as just writing it off as fun selling. However, the volume spikes and the open interest change in corn did not suggest it was fun selling. Now, from those two factors alone, we can never know for certain, but those are two important factors that both pointed towards saying that, at least for corn, it was more of a drift lower than fun to selling. Now, over in beans, the open interest did increase slightly, so you can make the case that maybe there was some light fund selling there. And on a comparative basis, funds are still a little bit behind corn in their bean selling. So there is still a little bit more room for funds to be selling beans. So we'll keep an eye on that here. But again, with funds at record shorts for both markets, many are looking for the fund selling to slow here fairly soon. Another concern for beans that's being talked about, and it's backed up with news, or historical news. There's talk that China's just not coming around to improve their buying as many had hoped we would see. We know that last winter China buying was below pace, and even though their buying during summer hasn't been that far behind pace, it is still slower than normal. So this brings up some concern, especially about potential new presidency that could be causing China to hold back on their purchases of U.S. beans. That's highly speculative at this point, but just we should know that conversation is being circulated. Moving over to wheat, the spring wheat, good to excellent rating up 2%. Now it's 77%, and that's the third best spring wheat good to excellent rating in history. So strong good to excellent ratings there. Overnight did offer a small bounce in overseas wheat, which helped to allow for a small bounce in our wheat. Basically, overseas wheat continues to be pressured on analysts now raising their Russian weather or production estimates. After all that frost risk, now that hard yield numbers are starting to come in, analysts are all raising their numbers for Russia, and that's putting general pressure on overseas wheat and our wheat. Moving over to cattle, box beef yesterday broke the streak of 5 lower days in a row. Choice was down 57, but Select was up 251 to come away with a net positive report. Packer profits coming into start this week to start here right at an even $9. A little bit above that $7 threshold, so maybe now we can start to turn around to assume a $1 higher cash trade. It's likely that most in trade will just take a more neutral stance as they did yesterday, waiting to see first cash bids before getting too excited about assuming that we'll be seeing a cash bounce this week. So that's what we have here today. If anybody has any questions, give me a call direct at 815-578-6149 and continue tuning in to the morning wake-up calls.